if I'm killing it with what I'm doing and I don't offer this opportunity to my friends and family and the people I care about, what does that say about me?
Yeah, interesting.
Like anybody who is doing something and having great success, but you're not willing to share that with other people, it's kind of selfish. And I get it. You don't want people to risk it or whatever, but that's on them. But there are people who, listen, man, if you got a way of winning anything, if you got a golf swing and you're doing something great with your golf swing, like you telling me you added 40 yards to your swing, your drive, you're hitting them straight now, you've shaved, three strokes off of your game. Dude, if you don't tell me what you're doing, I'm mad at you, right?
Yeah.
If we play golf and then 6 months later, you're out here looking like the reincarnation of young Tiger, I'm like, wait a minute, wait, Drew, what happened?
Yeah.
Like, tell me.
Yeah, at least
share.
offer this, right?
So I think that's part of that, right? It's like if you've got something that's working, how do you share that with other people?
I'm Drew Breneman, and this is the Rise and Invest podcast. I bought my first 2 properties as a 19-year-old with my own money that I earned from an online business I started in high school. I've now grown my portfolio from that first duplex to hundreds of millions of dollars of investment property. My goal with this show is to give you the resource I wanted when I first started out. Subscribe to our podcast where I break down real-life stories, tactics, strategies, and current market information you need to be a successful investor.
All right, welcome back to another episode of the Rise and Invest podcast. Today's guest is John Casmon, founder of Casmon Capital. Welcome.
Thank you for having me, Drew.
Great. Yeah, excited to have John on. I mean, he spends all his time basically helping busy professionals get into multifamily real estate deals. So happy to pick your brain today.
Yeah, man. Excited to talk to you.
Yeah, I think we probably met like 10 years ago, give or take. I know time goes by quick now. It's funny.
Man, it's wild. I'm doing the math like, probably somewhere between 8 and 10 years ago.
Yeah, because I think 33 Realty introduced us.
Yep.
And then shortly thereafter, you moved to Cincinnati, I think, from...
Well, I was here for 8 years and then moved to Cincy in 2019.
Okay, nice. Yeah, then probably hasn't been 10 years, but pretty close though. Then nice. Yeah, so excited where John has a really great background where he knows a ton about marketing, and I guess should have you explain it, but where I'm excited to get into really like the marketing angle today and how you're able to quit your job. And then also John's got a podcast. So, I'll pick your brain on that too. So it's been a big motivator and inspiration seeing someone actually new in real life have a podcast and then start my own.
Awesome, man. You tell me where you want me to start.
Yeah. How'd you end up getting going in real estate then?
So, to really answer that, I got to give you a little bit of the story leading up to it, right? So back in 2007, I was in Detroit, and I was working for GM and doing well, thriving, marketing, advertising, doing big campaign, big budgets, things like that. So I spent 15 years in corporate America doing marketing and advertising, and I really enjoyed it. And at that time, things were great, and then they weren't as great. As the time 2008 came around, the economy started to shift. The automotive industry in particular started to have some challenges. And we went through quite a round of layoffs, multiple rounds of layoffs. I saw a lot of my peers lose their jobs. And there was one round where we were going to go into bankruptcy. We already knew that. And, it was kind of like a Black Friday type situation where it was like, I don't want to go in the office. Like, it's going to be bad. And got there kind of late, and there was a voicemail left for me. So it was red dot on my phone. And I check it. There was a message from the guy who used to sit just in front of me, and he had been let go earlier that day. And I listened to that message, and I remember feeling very sad and empathetic for him in the situation he was going to go through. But I also realized that, this corporate dream is not guaranteed, and it can be taken from you at any moment. And you have to find a way to insulate yourself from being let go from your job. And I had read Rich Dad, Poor Dad years earlier, but I remember it just came back to me like a bolt of lightning. And I was like, real estate, you got to get into real estate. Like, you're not going to come up with the next great, tech app, like you're not going to solve or cure cancer or something like that. So like, if you really want to make it and not solely rely on this job, you're going to have to invest in something that is sustainable, kind of secure, tried and true. and real estate was that for me. So I made the decision to invest in real estate at that time. The challenge was this was Detroit 2009, and everybody I knew who had real estate was trying to fire sell it and to get out of Dodge. So as I started that journey, I was like, maybe this is not the best place or time to invest. And I ultimately moved to Chicago in 2011. And one of the main things I want to do was start investing right away. So my wife and I kind of spent the first year just really learning the lay of the land, what neighborhoods we want to be in. As we're recording this, we're in West Loop. West Loop is where I wanted to live and invest. The prices in West Loop had changed at that point. So we had decided, hey, let's go maybe a little further west. We went to a neighborhood called Tri-Taylor. And then we ended up buying our first duplex. So it was 2-unit property in North Center. Then we house hacked it, right? Which is a pretty simple strategy. You live in one unit, you rent out the other unit. And that's exactly how we got started. And then from there, the big thing for us was everything up to that point was just like books. And I don't even think I was listening to podcasts back then, but like, meetups or people we were talking to, but it was all philosophy. We weren't investing until we bought that 2-unit. And when we bought that 2-unit in 2012, we started to see the market take off. We had invested into the property to fix it up, and we created more equity than I could have ever dreamed of. And we ended up creating over 6 figures of equity. And that to me was like the point where I'm like, oh, this is what we need to be doing. Like, now I get it. Before I was like, let's try it. Let's see what happens. Maybe it works, maybe it doesn't. But that was like my proof point to say, okay, this is the legit way for us to build going forward. And, I really started to invest from there and just kind of took off.
Yeah. And the light bulb went off at that point.
Yeah.
How to do it. How would you compare, I guess, kind of what you learned reading versus actually doing it on that first deal?
The reading was very helpful, right? I mean, it's always good to have some level of education, but I would say that no matter how much education, practice you get, until you do it, like it's not real. And there's always something that's going to come up that you weren't prepared for, because it's just too hard to get into the minutia of every little detail of what could happen on a deal. So I'm very happy that we took the time to educate ourselves. It made me more comfortable with the process, particularly in a city like Chicago, where, there's a lot of laws and ordinances that can make it difficult for a property owner. So happy for that. But yeah, I mean, you just have to get into it. Once you start, then you can learn how to adjust. And I think the most important thing for anyone looking to get into real estate is figuring out how to be resourceful. Where can you get the answers? Because you're not going to know everything. And you can read every book in the world. You're not going to read and understand everything that could happen. But if you can find the resources to solve any challenge that comes up, whether that is through, again, podcasts or people, going to meetups and just building our network, that's going to be the best thing you can do. So when something pops up and you don't know what the solution is for that, go to your resources, get the answer, and then you can move forward.
That's great. I've noticed that with a lot of real successful people where they've networked and they know, let's say maybe it's an attorney that would have the answer or a different lender than they're using, or just knowing other investors and knowing where to go.
Yeah.
Because that's something that I've done too, where I've networked, and usually these like things where you got to be resourceful. I'm going kind of to a much more experienced investor and going, what have you ever ran into this? Or try to find an attorney who's just done so many deals where their answer is going to be, yeah, and here's how we handle that.
Yeah.
So nice. Well, great. So then your first 2 deals were in Chicago, the Tri-Taylor and North Center ones?
Yeah, we did. I mean, most of our early deals were here. So Tri-Taylor, we rented that one. So that was not one we bought.
Oh, right.
We bought the 2-unit in North Center, and then we bought a 3-unit in Avondale. So Avondale was an up-and-coming neighborhood at the time next to Logan Square. So Logan Square was hot. Avondale wasn't quite as well known at that time, but since then it's certainly gained in popularity. And then we bought an 8-unit building in Hermosa. So that 8-unit building was very intentional because we wanted to get experience with commercial real estate. And at that point, a few things were going on. One, that was a pretty big investment for us.
Yeah,
So,
because at this point you're doing it with all your own money.
oh, everything we were doing was our own money. So we were saving, working our W-2 jobs, saving everything we could and investing it back in real estate. And to rewind back, one of the reasons that 2-unit was so important for us is, well, now we weren't paying rent. So we had the first floor resident who was paying the bulk of the mortgage. We had to pay a little bit, but they were paying the bulk of the mortgage. We had created enough equity to get a line of credit on this equity now. We bought the 3-unit building. So we invested, put almost 80 some $1,000 down for that property. And then we bought this 8-unit, which we had to put over $100,000 down for. So we're building up our equity in these properties, but I mean, we literally have saved hundreds of thousands of dollars from our salaries. And we're doing well in our jobs, but it's not like we were making $250,000 or more. I mean, we were just over 6 figures each of us. So to save $100,000 annually to invest was a slow grind. And we had to step back and say, part of the reason we wanted to do this was to be able to insulate ourselves in case one of us lost our job. And when you really think about what we've done, we are building equity, which is great. But we are not building the cash flow we need. We're going to have to change our strategy if we really want to grow to hit our goals and objectives. So in order to do that, we realized that we needed to really bring on partners. I just couldn't rely on whatever I had in my bank account. We were finding deals, we were doing well, but I was limited based on how much money I had saved for, whatever time period when I was looking at a deal. So I started to warm up to the idea of working with other investors. I was still a little, lukewarm and apprehensive about it because I just felt like when it came to investing, you were supposed to invest what you had. Like I thought that was the rule, right? The rule is whatever you've earned and made is what you can invest, and that's it, right? And I really did look at it as an individualistic approach. And you would hear people talk about, real estate being a team sport or investing as a team or group investing. And conceptually, it made sense to me, but I did not want to be responsible for someone else's money. When I was right, I felt good because I was taking a risk and I put that education to work, but I was backing it up and it felt good to do that. But if I was wrong, it was just my money at risk, right? And I also was humble enough to know that I didn't know every reason I was right.
Right.
Like when you're winning, it's easy to feel like you're invincible and you got it and you know it. But when you lose, it forces you to look at what you did wrong and to learn from those mistakes. And we hadn't really hit any bumps in the road up to that point.
Right.
So I was still very cautious to say, yeah, it's working, but I don't know why it's working. And what if I miss this? What if I mess up? What if something happens? So I was still pretty apprehensive to work with other people. And a couple of things changed that. One, I sat down with a friend of mine and she had grown her portfolio from 3 units to 9 units to 90 units in a matter of 2 years.
Wow.
And I was floored by that level of growth. And I just had to ask her how she did it. And we sat, we talked, and she flat out told me, I started partnering with other investors. She said, people have been reaching out to me from California and other markets, and they've wanted to invest. And I was apprehensive myself, but I said, listen, as long as you know that you could lose everything, and I want to drive the deal, so I'll find the deal, I'll run it, I'll do everything. But if you want to partner with me, then that's fine. I'll put money into, but we'll partner together if you just want to do it that way. So she found like these people were really reaching out to her to do that. So I said, wow, okay. I hadn't really thought of that as an option. And that makes a lot of sense. And then the other thing was, I said, well, you know what? Let me also figure out, how do I solve this problem of not knowing what's working? I had a pretty good sense of what was working, why it was working, but I didn't know like, hey, here are the things that could change, or that if you keep going with that strategy might be an issue for you. So I hired a mentor. And for me, it just made sense. If I was going to work with other people, I needed to do everything possible to make sure I was fully prepped and I was ready to partner with other people. And a mentor became the next logical step for me. So that 8-unit building was intentional for me to get experience in commercial, to work with a third-party management company, and to further position myself to start working with other investors.
Yeah, great. Because then up to that point, you had I'd imagine the line of credit and the financing on the initial deals. It's all like a local bank.
Yep.
And then who'd you use on the 8 unit?
Yeah, the 8 unit was, who do we use? We used, it was a local bank as well. Oh man, it's slipping my mind now. They've got two branches here, and I cannot remember what it was.
So many deals, hard to remember now.
Yeah.
But no, that's interesting because when you were saying that, that's when you're thinking, when you're saying get experience with a commercial deal, to me, what I'm thinking the most different is the financing, I'd say, where now if you wanted, you could, like Chase Bank is here and they have a really good program once you get over 5 units. Yep. And so does Fannie and Freddie. And so but yeah, it's a different animal where, right, before if it's 1 or 2 units, you probably keep track of things like in a notebook almost. That's what I did actually. It was my first deals was literally on paper, the accounting. And then I eventually started doing it in Excel.
Yeah.
But yeah, so that's interesting because what was the biggest difference between, let's say, the 2 unit and the 8 unit, would you say?
The biggest difference from, residential 2 to 4 units to commercial 5+ units, there were 2 things. One is through the financing, like you said. The other is in expenses. So in the financing, the biggest thing for me was understanding what the lender was looking for. There's recourse and non-recourse. When you're in residential, everything's recourse, period. They're looking at you. They want to know how much money you make, how much money you got saved. And that's pretty much what they're going to use to decide whether or not you get the loan. When you're in the commercial space and you're 5+ units, they're looking at you, but they're also looking at the property pretty heavily. They're seeing what's the revenue it's generating, what's the net operating income. They want to know how this property is performing. So they're underwriting the property, but then they're also looking at you. And then if you get a recourse loan, what that means is you are personally responsible for this property. If this thing, doesn't pencil, you're not making any money for whatever reason, you are going to have to either pay for it or it's going to be a big hit on your credit. With a non-recourse loan, you don't have to take all that responsibility. They still want you to perform and do well, and there's some carve-outs in case you would deliberately do something wrong or misleading. But if it's not your fault that the property just stops performing as well, the bank will take the property back without really hitting your credit too hard. So it's a different ball game in that sense because the lender is basically saying, hey, with these non-recourse properties, they've got so much value. I don't care if you suck at what you're doing. I'll just take it back and then go get it to somebody else and I'll still make my money. So that's really interesting just conceptually to think about and what that process is like. And then the lender terms are huge, because again, residential, you're pretty much getting a 30-year, fixed rate loan for the most part is what you're going to find and get in most lenders, right? It's going to be the same thing. Whatever the current interest rate is, you get the interest rate, 30-year fixed terms, and that's that. With commercial, the options are pretty broad. You can get a bridge loan, which could be anywhere between 1 year, 2, 3, 5-year loans. You can get a 5, a 10, a 7. The fixed period could be shorter. It can be amortized over 15, 20, 25, or 30 years. Every line item in there, is adjustable. The prepayment penalties, there's so many different factors that you've got to keep in mind on a commercial loan. So the financing and the terms are very different in comparison to a residential. The other thing is the expenses, particularly here in Chicago, because when you have a 2 to 4 unit in Chicago, things like trash, that's included in your taxes. So you pay for that. It's already done. When you get a 5+ unit here, you have to outsource trash to another company. So you got to go get a contract from, one of these firms to come out and do your waste and trash removal. So little things like that may be different. The other thing is property taxes. Property taxes pretty much get adjusted everywhere. But if you buy a larger property, that property tax bill may shift greater than on a residential, particularly if it's not owner occupied. So little things like that you definitely want to pay attention to because they could have a pretty big impact on your bottom line.
Yeah, and the next buyer is definitely only looking at what's my net operating income on a commercial deal. They're not thinking, hey, this got like a nice owner's unit in it. I'll just kind of, this works for me because I want to live in it. And then they kind of push their numbers because that definitely, like, especially if that 2 unit you bought and lived in was nice, that could be your next buyer. Whereas on the 8 unit, that's just an investor.
That's spot on.
So
And that's critical for someone to understand is like when you go 5+ units, you are only dealing with other investors. Well, every investor wants a deal, right? There's not investors like, I can't wait to overpay for this next property, right?
Yeah.
Everybody wants a deal. So that's the mindset you have to understand is that when you go there, the margin for error shrinks a little bit. You have to understand what you're looking for, how you're going to create value, what's your business plan, how do you protect yourself. And if you can do that, you could be successful. But before you make that transition, or if you're debating between 2 to 4 units, 5+ units, something to keep in mind. The flip of that is true too, though. On the flip side of that, residential properties are valued based on, what the neighbor is selling his property for. And commercial properties are typically valued based on their performance, right? So if you can increase the value, increase the rents, or increase the net operating income, you can create more value and force appreciation on these commercial 5+ units. Whereas even if you did do some of those things, a lot of lenders in a 2 to 4 unit space are still going to look at what the other 2 to 4 units are selling and value based on that. So, the fact that you've increased your NOI on a 3 unit, it may feel like you're doing everything right, but those lenders are not necessarily going to give you the credit because your NOI is 20% higher than the dudes down the street.
Right. And then they're going to need an appraisal. And then and the appraisal are still using,
Exactly.
comparables per foot, per unit, whatever.
Yep.
Nice. Well, yeah, it's really great. I'm in retrospect then how you learned that lesson really early on, just to jump back to that, back in Detroit, because that's something that I learned only in a book, hearing, people talk about like a job feels so secure, but really you just have one income that could be turned off like at a, snap of fingers one day. And most people never realize that. And you learned it right away with the guy sitting across from you.
Yeah.
And so that's huge. That's a really, I'm sure in retrospect, that got you, going on this path. And then, I guess just to bring it up to what you were talking about, how did you make the jump then to either convince yourself, or what you need? You got the mentor, and then that helped you with the skills and then like a mindset shift to be able to take capital on, or how'd you start that?
Yeah, absolutely. So the biggest thing for me was when I brought on the mentor, the thinking was, okay, I want to start working with other investors. And in my head, I still wanted to stay relatively small. I bought an 8-unit building as that commercial property. So I was like, well, maybe I'll get a 12-unit, right? Or maybe I'll push it and get a 20-unit, right? But that was the thinking. And the logic was, well, if I do that, maybe I can partner with other people to bring about half of that money, right? So it can save me a little bit of time. And what ended up happening is, I went through that program, learned a lot about deal structures and how these things work and all the different ways to approach these deals, how to analyze deals. Because at that point, when you're analyzing deals for yourself, it's pretty straightforward. It's like, what kind of return do you want? You want an 8% return? You want a 10% return? You want a 12% return? Is this deal going to give it to you or not? Right. And now that's all we were doing. It's like, okay, well, hey, I think rent should be here. I can do this and this. Great. Let's buy this property. Well, when you get to the point where you're working with other investors and they're looking for an 8% return or a 10% return or whatever that number is, now you've got to say, okay, well, how do I find a deal that can deliver the return they're looking for while still making enough profit for me to be worthwhile? And when you go through that exercise, it starts to open up your mind that, wow, a lot of the deals that could have worked for just me don't really work when you're splitting the proceeds with someone else. So now I have to push a little bit more about my comfort zone and, what kind of deals we want to take on. Do we want to take on deals that maybe need more work? A little more hairy deals where we've got to do more construction, or do we change markets and locations where maybe we get better cash flow in some of these markets, right? So we started to have to shift and push our business plan and our philosophy. And that absolutely made me more comfortable to work with other people because I felt like I was actually learning a lot more about how to evaluate deals and markets and opportunities. And eventually what ended up happening is my mentor just grew his portfolio just crazy. And in watching that, like having a front row seat to watching someone build a multi-billion-dollar portfolio, you learn from them and you make adjustments to your plans. And I certainly had some limiting beliefs and kind of some goals that probably were smaller because that's what felt achievable and realistic to me. And then you watch this guy go out and buy this property and that property and this property, and they're raising money for a lot of these deals, right? And when we would talk, I would ask, hey, well, how'd you do that? Or how are you coming across these people? And all of these different things. And you start to get more insights. And one of the big things that I took away is that it was possible. And I think before you can do anything, you truly have to believe that you can be successful in that opportunity. And I go back to both my corporate career, where, I was one of the youngest advertising professionals. I was an advertising manager at this big corporation. I was crushing in my, my W-2 job, did amazing on those first couple of, real estate deals. And again, not to say like I was perfect, but to say that we have to recognize where we have wins and take that confidence and build on it, because it's easy just to look at, oh, well, I've never done this before, or I've never done that before. I'm not good at this. But you have to look at what you are good at and what skills can you take. And when I step back and really put some context to it, to say, I've been recognized by publications as one of the best marketers in the country. I've overseen $100 million advertising campaigns. My work has been on TV. Like, you can talk to a couple of investors and ask if they want to partner with you on deals that you're investing in as well. You know what I mean?
Right.
But you have to step back and like give yourself like a pep talk. Like, you got this, man. Like, what's the worst that's going to happen? They say no.
Right.
No, I'm not interested.
Yeah. You're in the same spot then.
You're in the same exact spot. So part of it is an ego thing, and we have to be able to step out of our comfort zone for that. And I'll give you the thing that really helped me. When I realized it was not about me, right? Because before, it's like, if I talk to you and I say, hey, Drew, hey, man, I've been investing in real estate and I've got this deal I'm looking to partner. You got some interest. If you said no, I would have took that as a personal assault on me.
Interesting.
Drew doesn't want to invest with me, right? Why doesn't Drew like me?
Right.
What is it about? And maybe it's the deal. Maybe it's the market. Maybe you don't like real estate.
Yeah, or maybe they don't even have the money right now. I mean, it could be so
maybe you don't have the
things.
money.
Yeah.
And it's not like, oh, you hate me, but it's I didn't do something right. Maybe I didn't present this right. Maybe I didn't say the right thing. But I put it on myself, right? And that's just, I'm a person who I believe in, you have a lot more control in situations than you give yourself credit for. So that's just kind of the way I'm wired. So if we were to have a conversation, you said no, then I'm going to go back and say, well, maybe I didn't present it the right way, or maybe I don't know what Drew is looking for. You know what I mean?
Yeah.
So there's that. But the first thing is like, it's going to be a confidence killer, right? Because if you tell me no, well, how confident am I going to be to go to the next person and they tell me no, and I get no 5-6 times in a row? By the seventh person, one, you look like you're begging, right? Now your ego is shredded, so it's tough, right, to go that way. So, and that's most people's fear with raising money, right? No one wants to go out there and be told no and get rejected, flat out. You don't want to get rejected. It's painful. It's not fun. You meet people who like love sales and they love getting doors slammed in their face.
Yeah,
All like those people, they got no problem with that. That's not me.
Yeah.
I'm a guy who I need my celebration. I need my data boys. It's just one of my things. So one of the biggest things that helped me was realizing it wasn't about me. Take the ego, put it on the shelf. If you can help other people, if you can truly help other people, and you can present them with an opportunity, that's where the value is. Let's go back to that first deal. Now, I didn't know we were going to do that, but if I, with pretty good confidence, knew, hey, there's a pretty big gap in the market. I'm confident that if we do X, Y, Z, we'll be able to create this value. Would you want to partner with us if we do this? If they say no, that's fine. I'm still going to go out there and do it. Now I've made X, Y, Z for myself, and you have to look at it and say, damn, John just went out there and did this, gave me an opportunity to join him, and I said no. That's on you now. The flip of that is, if I'm killing it with what I'm doing and I don't offer this opportunity to my friends and family and the people I care about, what does that say about me?
Yeah, interesting.
Like, anybody who is doing something and having great success, but you're not willing to share that with other people, it's kind of selfish. And I get it. You don't want people to risk it or whatever, but that's on them. But there are people who listen, man, if you got a way of winning anything, if you got a golf swing and you're doing something great with your golf swing, like you telling me you added 40 yards to your swing, your drive, you know, you're hitting them straight now, you've shaved, you know, three strokes off of your game. Dude, if you don't tell me what you're doing, I'm mad at you, right? If we play golf and then 6 months later, you're out here looking like the reincarnation of young Tiger. I'm like, wait a minute, wait, Drew, what happened? Like, tell me,
at least
share
offer this, right?
So I think that's part of that, right? It's like, if you've got something that's working, how do you share that with other people? And that mentality really allowed me to grow. And it's not to even say, hey, come partner with me. It's just to say, hey, you should look at real estate. Figure out what strategy works for you. Right. If investing with me is an option, let's talk about it. But real estate is a powerful tool. More than, you know, I think the stats are like 90% of the world's millionaires have a portion of their portfolio in real estate. It might be higher than that.
Yeah, it'd be hard not to be a millionaire if you do this for long enough.
Right. So especially in a hot market like this. And when you start factoring in all the advantages that real estate has, you can understand why it's such an attractive investing vehicle. So for me, it really became, well, how do we share what we're doing in an authentic way? Here's where I'm at. Here's my knowledge. Here's my experience. Here's my team, you know, and here are the kind of deals we're looking at. And that's what we started to get a little more comfortable with. And then I also learned that most of the people I was talking to, they certainly did not invest the time and energy I've invested up to this point in real estate. You know, I've been reading books and going to meetups and all sorts of stuff before I bought the 2-unit. And then once I bought the 2-unit, I'm attending meetups every month, you know, and launch my own meetup. And now I, you know, ended up launching a podcast to help these people, right? So that's one of the things as well, is like, well, if you're going to do this, you have to truly come from a place of service, you know, serving other people. Now, I know some people have, you know, rich uncles, whatever. Great. If you can make a phone call and you got $1 million wired into your account, kudos to you. For people like me and most other people, they just don't have that. And quite frankly, even if you had that rich uncle, do you want to call that person, right? If you're not confident, you haven't built it up and really done it right. So I think most people want to build up their confidence, build those connections with like-minded individuals, and then ultimately grow together. And, you know, doing things like the podcast and the meetup certainly helped me do that.
And would you say you even had many, let's say, friends or family members invest in the deals? Because one thing just about myself, like with originally I thought like I won't have any investors. Like my parents are teachers, they don't know anybody who could invest. They couldn't invest, and that's how I thought. So I was doing my own deals. It was real similar to your situation. And then I started meeting like almost like parents, friends, or coworkers, or I should say my friends' parents or coworkers' parents. And now all of a sudden these people are interested. And it just blew my mind, because then you're, you know, I'm not sure if the same happened to you. So I'd be curious kind of who some of those initial investors were. Because it might have been, if you don't see a lot of people that you already know could invest, it's hard to make that leap in your head that there'll be people that you meet and then they want to do it. Yeah. Like that was a big shift for me.
It was an absolutely difficult leap. And I go back to the mentor and why I believe in mentorship so much, because I think by myself, I would not have made that leap, because in having my initial conversations, people were interested, but not ready. And I didn't really know how to delineate the difference between, you know, the kind of things they were saying that were indicating that, hey, maybe, but they need more information first, right? And the mentor, in watching that person, it basically showed me that this works. You just have to do it. And literally I was like, all right, I'll just do it. Let's just see what happens, right? And without that, I don't know if I would have pulled the trigger. I don't think I would have made that leap. I think I probably would have said, all right, well, let's just try to do another 2 or 3 deals by ourselves and see what happens. And, you know, maybe we'll grow it or maybe not. But it, you know, we did. And to your point on that first deal, the first large deal we did was 192 units. So that one, we were general partners and met a group, a guy down in Texas, and had a great relationship with him. My wife, you know, was like, hey, we're going to have dinner with this guy. I'm like, what? So we sat down, had dinner, and, you know, we both liked him. And when I launched my podcast, he was the second guest.
Nice.
My first guest was a guy I wanted to interview because I wanted to learn about the Cincinnati market. I knew I was going to be moving there and investing there. And he was my second guest. And shortly after the interview, we were, done talking. And I'm like, hey, so what's going on? How's everything? He's like, great, working on a deal. And I'm like, well, listen, man, I've been looking for a deal for a while now, having a real hard time finding something. If you need help, I'd be happy to help you with some marketing, some investor relations. I got some other things I can do. And he's like, all right, sounds great, man. Well, we've got this one. If it comes, I'll let you know. About maybe 2 weeks later, I reached back out to him and he said, hey, man, yeah, we got the deal, but we're all set on the team. Everything's good, but I'll keep you posted if we find something else. I'm like, all right, great. A week later, he calls me back and he says, hey, man, you still interested in helping?
Oh, nice.
And I was like, yeah, what happened? Well, they were going with a private equity company and that private equity company just fell through, And so he's like, yeah, we need some help. Any help with marketing, any help with this? I'm like, all right, great. So we ended up partnering with them. And that was the first time I had a live deal. And I think that's really important because you can have all the conversations in the world with your friends and family and potential investors, but until you have a deal to put in front of them, you don't know really where they stand. And maybe you don't know what objections you should anticipate or questions you need to overcome, right? So that experience was very helpful. And I had a couple of, one of my really good friends invested, I had a family member invest, but everyone else who invested was someone I met who just knew we were interested in real estate. And they also had an interest in real estate. And that was just really eye-opening for me because I thought I had a lot of other people who would invest that I knew, who I knew had good paying jobs, corporate careers, all that kind of stuff, but they didn't invest, right? So like you, it's like I certainly had the people who I knew didn't have the means to invest. That was expected. But there were people who absolutely had the money to invest who didn't invest. And that was surprising. And then I found like, okay, so then you start to step back and say, that it's interesting that these 5 people said yes, but these 15 people said no. And did they say no, or did they say not now? Or did they say, I need to learn more about this? Or, you know what I mean? Like, so there's a whole process of starting to understand what people are actually communicating when you're talking to them. And that becomes a whole other ordeal.
That's very interesting. And I would imagine there's still 2 people you've known a long time and they just know you as like the regular John.
Yep.
Like, and this is like hard for them to make their own like mental leap that you have some good deals where you meet a new person that's looking for this and it's like they want to do it and there's not that sort of hang up that it's not your thing, it's like it's their thing. So I'm not sure if you ran into that, but that's
no, absolutely. And that's the thing is like it's there are 3 things that have to be true for someone to invest in your real estate deal or really any opportunity, right? The first thing is they have to believe in the opportunity. Period. It's got to solve a problem that they face. If they don't believe in the opportunity as a concept, they're not partnering with you. They're not investing with you. They're not buying from you. So do they believe in real estate as a tool to help them with their financial goals? That's the very first thing they have to believe. So if the answer is yes, then they have to believe in you. Do I believe in you? Do I trust you? Do I believe you have the ability to find and bring a deal that can help me achieve the goals that I have? If the answer to that is yes, now it just comes down to that deal or that opportunity, right? And that's true for whether it be real estate or any product, right? If I'm thirsty, well, I've got this bottle of water, right? Well, all right. Do I believe water is going to cure my thirst? Yes, I do. Do I think this bottle of water is going to work? Yes, I do. Am I going to drink it? Yes, I will.
You trust it?
Right.
Yeah.
So it's a very simple process. And we sometimes make these decisions quickly. Well, why did I kind of do water? Because I've been drinking water my whole life. If you had hot tea, well, now I'm like, well, yes, it could quench my thirst, but it's hot. So I can't really gulp it. I've got, you know what I mean? Like there's a whole, again, process that goes on. So when it comes back to real estate, it's going to be much easier for people who already believe in real estate. Now, they may not know you, so that may be the hiccup, versus people who know you, well, they may not understand real estate. So some of them may be interested, but they don't understand how real estate works. For most people, they think real estate investing is being a landlord or flipper.
right.
That's the only 2 strategies most people are aware of, is that I have this property and I have a tenant who pays me rent and I'm a landlord and I don't want to be a landlord. So I don't want to do that.
Right.
Or I could buy an ugly house. I got to spend all this money to fix it up. I don't really like that. So I don't want to do that. So they're out because that's all they've seen or that's all they know about real estate. But you and I know there's multiple ways, dozens and dozens of ways to invest in real estate without being a landlord or a flipper.
Right.
So part of it is also the education process of, hey, here's some strategies to invest in real estate without picking up a hammer or being a landlord.
Right. You could have just invested in both of those kind of deals as just a passive investor.
Exactly.
Or it could have been a lender. There's a lot of ways to go.
Exactly.
Nice. Well, then download our 100+ page passive investing guidebook today at riseinvest.com/downloads. Accredited investors can sign up for our multifamily investment opportunities by hitting the Invest Now button on our website. Now back to the show. Some more stuff you've learned about raising money then. Be curious.
I was in marketing for 15 years. So I think this part took longer than I'd like to admit, but it took a while for me to realize that this business, and I talk about apartment syndication, which is my primary business, where I work with regular everyday professionals to invest in larger apartment deals. Well, this business is just like every other business. Every business has operations, HR, sales and marketing, finance, and then some sort of product development, right? So in this case, if you want to grow, that growth typically comes from having a good product and then sales and marketing. So that marketing background really helped me when I put some of this stuff together to say, okay, who's our customer? Who's our client? Who is we call them an avatar, right? So who's the person we're trying to help? What do they look like? What questions do they have? What challenges do they face? How do we help them? And by understanding that more, it became easier for us to communicate the solutions that they need. So many of our investors are professionals. Most of them have a W-2 job. Some of them are very, high net worth doctors, engineers, lawyers in those professional settings. Some of them, own a practice. Some of them are high paid directors and CFOs and CMOs at different corporations. Some have, other industries altogether, IT professionals. So all of them, not all, but many of them have a professional background where they've got a W-2 job that they enjoy. And even if they don't enjoy it, it pays the bills and they're not about to quit it, right? So they've got a W-2 job, but they recognize the need to diversify. Maybe they've got money in 401k. Maybe they have a couple of stocks. Maybe they threw a little bit of money in crypto, but they're getting a little uneasy about where the markets are in general. And real estate's a secured asset. They've always been interested in real estate, but they don't want to be a landlord. They don't want to be a flipper, right? And maybe they have a couple rentals. Maybe they've invested in the past and just don't have the time to do it today. So by understanding who that person is, we can now better talk to that individual, let them know how working with us can help them, how they don't have to be a landlord, how they don't have to be a flipper, and really how they can grow their portfolio without having to do a whole lot of extra work in the real estate space that partner with us. So then, there are natural questions that they're going to have, right? They want to vet us. They want to know who we are. What kind of social proof do we have that we've actually have been able to do this for other people like them? So there's that process that goes into place. So it's really important to understand that and start to anticipate questions. Before I came here, I was getting a text from one of my investors and he's asking about distribution. So I'm like, I sent the distributions. They were processed last week, but they don't show up for a few days. So I'm like, hey, per my last email, you'll probably get them this week. So if you don't get it by Friday, let me know, and then I'll keep monitoring it. But if you don't get it by Friday, then maybe something is wrong. But other than that, you should probably get over the next couple of days. So it's a process of trying to get in front of conversations. So I want to let them know up front, hey, here's when you can expect distributions. I might have to reiterate that. Hey, as we talked about, you'll probably get them this week. And then, following up, hey, we want to make sure you got your distribution. Everything's good. You're happy, right? So just customer service, just following up people, talking to them, realizing that for many people, this is a scary venture, right? Like people don't want to say it out loud, but when you're talking about these investments, we're talking about $50,000, $100,000.
Right.
Like we're talking about large sums of money for most people. So there are questions that people have, and sometimes they don't even want to say them out loud. But, it's like, is this real?
Right. Or there's not sometimes a dashboard, a screen, like I give the money, I know I own these shares, but there's not like a
Yeah.
thing to go
Can I see the
shares.
property? Can I are you sure? Like how do I know
Right.
that I actually own this investment and this
Right.
isn't some scheme or something, right? So there are things like that, you definitely want to make sure you can put people at ease and show them like, hey, here's how it works. Here's our attorney. Here's all the paperwork. Here's our other investors. But a lot of this stuff is pretty transparent. It has to be filed with the SEC. So it's all legit. And there's, no, I guess no issues from that standpoint because it's pretty transparent. It's available. It's out in the open. You can go and look it up. You can see all this data. So it's there. But again, if this is your first time, you may not know. So it just takes
Right.
a little bit to get comfortable with that process.
Nice. Yeah, that's interesting. And then I guess, I know you've used your marketing background so much. How's that helped you like further with this, would you say?
I think one of the biggest things for us is always looking to grow our business. And to grow any business, you're going to need new clients or new customers, right? So for us, it really comes down to attracting investors on a continual basis. So when I talk to people about that, I put together like 3 C's to attract capital, right? So that first C is confidence. If you don't believe in the opportunity, you don't believe in yourself and your abilities, how is somebody else going to believe? And I'm not talking about blind hubris, right? We're not talking about just you woke up today and I'm just a man, I'll make it happen. I'm talking about the confidence that comes from putting in the work. Even if you've never done a deal, you can listen to podcasts, you can read books, you can underwrite deals, you can attend meetups, you can put together sample deals. If you get a deal from a broker, underwrite it, put it together. At what point do you think the deal makes sense, right? You can go through those exercises until you feel confident in the work you're doing, right? So you've got to build that confidence. The other part of that confidence is who's validating this? Who is, making sure the work you're doing, you're putting in the right work. I think about it like going to the gym, right? You got to put in those hours and those reps. If you're playing a basketball game, you don't just show up game day having not practiced all season and expect to be great. Kobe used to shoot 500 shots before the game,
Right.
every game, 500 shots before the game. One of the best basketball players of all time. And that's what it takes, right? So you got to be putting in that work so you are confident when the time shows up. So confidence is the first C. Second one's going to be credibility. Again, you may not have that experience, but what are some other things you could tap into? For me, it's my corporate experience, right? I've never bought a 192 unit apartment building before that, but I've overseen a $100 million advertising campaign. I've overseen 7 agency partners. I have overseen all sorts of television productions and radio productions and print productions and online ads. I've had to present to CMOs and CEOs of large corporations. I've had to do new business pitches, right? I've had to put myself out there in uncomfortable situations. I've had to do a ton of research on, who we're talking to and what are they looking for, and sit down and do focus groups. So I took all of that and said, well, I've never done this. Here's what I have done. And I think this transfers really nicely into this world. And then on top of that, I am surrounding myself with people who have done this. Here's my property manager. Here's the experience they have. Here's my partner or the rest of my team. Here's my mentor, my coach, who's going to be looking over my shoulder and make sure that everything is going well in this deal, right? Here's my contractor. So you can put together a great team that helps build your credibility. And then that third C is going to be your connections. So you got your confidence, you got our credibility, and then our connections. So connections are key because yes, you want to have those people who are ready to invest with you, but they may not be ready. And I think what's better and a more appropriate approach is to continue to figure out, how do you build connections? How do you leverage the network you have today to grow and expand? And I will go back to attending meetups for me. Attending meetups allowed me to meet that woman who went from 3 units to 9 units to 90 units. From talking to her, that allowed me to meet, the guy who became my mentor. From talking to him, that allowed me to meet the guys who became my initial partners, right? And from an investing standpoint, if you're looking to attract capital, you need to talk to people in your circle and see who else they can introduce you to. I think about it like if you're getting ready to open up a bakery, I wouldn't just call you and say, hey, Drew, I'm opening up a bakery. Can you buy 5 sheet cakes from me, man? You'll be like, dude, what? What am I don't need 5 sheet cakes. But I might say, hey, Drew, I'm opening up a bakery. I'm looking to grow and expand. Do you know anybody who's having a large gathering, particularly a wedding, anniversary party, graduation party, anything like that that's coming up where there's going to be a large gathering? If you do, I would welcome an introduction. And in the meantime, I can give you some samples and bring some to your office just so you get a sense of the quality, right? So that way you can feel better about me as a baker. And, you can maybe say, oh, my cousin's getting married this summer. I know she's looking for someone. Why don't you reach out to her? And that's a way for you to grow your connections without necessarily forcing your friends and family to invest with you. So I think that strategy just works really well if you put the confidence, the credibility, and the connections together.
Yeah. And we haven't had anybody on yet who's talked about meetups. So that's something I haven't done personally, but I know you've done. You started your own. So how do tonight. I know, how do meetups work? Let's hear Meetups 101 real quick.
Here's the thing that I love about meetups. You may not get this, but I'm an introvert, and I only say this because I think people assume that only extroverted people can thrive in this space. Do the podcast with the camera and the mics and all that stuff. It's not my natural zen. I'm more of a kind of homebody type person, and my wife is way more outgoing than I am.
Funny because I am too, and then I'll do some of these things, and I feel I'm really pushing myself, and I'm like I feel tired after.
Oh man, listen. So I just did an interview on Thursday with a guy he's going to be doing a daily podcast, and I'm like, man, kudos to you, because I could only do about 3 recordings a day, and that's I get tapped out.
Yeah.
Like I'm drained at that point, right? And I know a guy who was doing 7, or matter of fact, he was doing 15.
Wait, in a day?
In a day, and it had them lined up back to back to back. Shout out to Whitney. 15 episodes. I'm like, but he had a full-time job, so he had 1 day a week basically. So he will record 2 weeks worth of episodes in a day.
How long was each episode?
Like 20 or 30 minutes.
Yeah. Wow.
But he had them scheduled all back to back. So it was like 20 or 25 minutes. And then, he had 5 minutes in between next episode.
And this was while he had a full-time job?
While he had a full-time job.
Okay.
And I just can't do that. Because for me, what will happen is by the 4th or 5th one, I don't have the same energy.
Right.
So it's going to come across, right? You're going to listen. I'm like, yeah, that was cool. How did this deal go? And then you're gonna be like, this dude sucks.
Yeah.
Like
I know.
Dude, wake up.
Yeah,
So,
I did 3 in a row once, and it was the same thing. And then 2 were shooting in front of this window, started getting like dark. Yeah. So
it's tough, man. So you got to understand yourself, right? You have to understand yourself. How do you get energized? Here's the thing that's really cool about meetups. Hosting a meetup in particular. When you are the host of a meetup, people come to you, right? Yes. People come to you. When you attend a meetup, the challenge when you attend a meetup is you now have to work a room. You're there. You're one of how many ever other people are there, and you got to figure out who you want to connect with. And particularly if you're there for a reason, like let's say you wanted to meet real estate agents or real estate brokers. Okay, great. Now, how do you figure out who the real estate brokers are?
Okay.
So you're in this room, and now you're like just walking around looking, and it's a little, so it's kind of a tough, unnatural thing, right? If you're an introverted person, if you don't really feel comfortable just walking up to people. So a different approach is to host a meetup, because now everyone registers. As the host, you got to say some words. So yes, that's the downside, is you may have to talk. But if you can get over that, well, people are going to talk to you. And if you can tell people, hey, here's who I'm looking to meet. Oh, great. Such and such is over here. But everybody wants to talk to the host. You don't walk into somebody's house and not go talk to the host for a second. So it's much easier for me to just talk and engage with people than it is for me to start those conversations. So for me, it helped tremendously. And people always give a little bit of credit to the person organizing, because think about the initiative it takes to do that. And the same reason someone is looking at it and saying, oh, I don't want to host a meetup, it's the same reason you're going to get credit for doing it.
Yeah.
Because you're going to be the type of person who takes action. And people who take action tend to get results, and more results than the people who don't take action. Even if you don't have that experience. Let's go back to what we talked about with credibility. You may not have experience, but if you've launched a meetup and you're now surrounding yourself with tens, dozens, hundreds of other investors on a consistent basis, you're going to learn a thing or two.
Yeah.
If you're talking to hundreds of other investors, or you've built this group and you've got hundreds of other investors that you're bringing guests in, or you're talking to people with, you're going to learn a thing or two. So that helps to build up that credibility. It's going to build up credibility who are there too. Oh, this is Drew. This is Drew's event. Oh, okay. Well, guess what, Drew? Kind of put you on a little bit of a pedestal because I'm here at your event. So if you tell me you're looking to do something and you're transparent and say, hey, yeah, this is the first deal we're looking to do, blah, 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 blah. Well, Drew, just from the fact that I can see that you took the time to put together an event, I can tell you're serious about this, right? Because if you weren't serious, you would just call random people and say, hey, man, I'm doing this deal. You want to come in with me? But you took the time to build this event. You've educated yourself. You surrounded yourself with other people who are doing this. You are doing everything in your powers to make sure that you set yourself up for success. And that's going to play well with people who want to partner with you, right? Because they know you too.
Yeah.
And the thing is, especially coming out of COVID, we miss the human interaction. There's only so much you can get out of Zoom. But if you're sitting across from somebody and I meet you in a room and we're talking about apartment investing or whatever, I'm going to feel way more comfortable investing with this guy who I know is real. I saw him. I know where his events are. I know where I could track him down if I need to, right? Yeah. But that's going to feel more real than someone who I only know from, the land of the digital, right? So that tends to play really well in the meetup space.
And then what happens? So at the meetups, there's different speakers to the whole group, and then networking is how it.
Well, I mean, I think everyone, you've got to figure out what you want to do for your meetup. What I like to do with my meetup, and I think anyone who is starting out, bringing in a speaker is a great way to do it. And the reason it's great is, again, you don't have to rely on your own expertise. If you're saying, well, I've never done a deal, why would I come out here and host a meetup? Well, yeah, you're right. That's going to be bad if you go up there and you try to tell everybody how to invest in real estate and you've never done anything. But if you could find people who are experienced and you can bring those people to a stage that you create, then you can get great value. And what I found is, and this kind of goes back to the marketing space, when you create a platform, and if that platform is there to truly serve people, you can thrive, because people are less concerned with you if they're getting what they want, right? Like, no one's listening to this right now saying, well, why should I listen to Drew, right? You're giving them a promise of, here's what you're going to get by checking out this episode, right? Or here's what you're going to get if you attend this event. And if you can pay that off, that's going to work wonders for you. People won't care as long as you deliver what they're looking for. And a meetup's the same thing. If you are looking to grow a meetup, and maybe you want to teach people about, seller financing, for instance, go get someone who specializes in seller financing and have them talk about that. Or, converting a self-direct IRA to invest in real estate. Go get someone from one of these self-direct IRA companies and have them talk about that, right? And if you're clear on what they're going to get when they attend the event, then they're going to feel like you gave them a lot of value, because they're only going to attend if they feel like they're going to get the value, right? If you say, hey, come learn about self-direct IRAs, if I don't want to go, I'm not going to go. Right. If I go, then clearly I want to learn about self-direct IRAs. So it's, now you need to tell me about self-direct IRAs and how does it work? And here are my questions. And can I do this? And can I do that? Right. So that's the logic. But you have to have kind of a stream of, here's how this comes together. Because if one day you're talking about multifamily investing, and the next day you're talking about stocks, and the next time you're talking about crypto, and the next time you're talking about life insurance, well, that's fine if you're talking about overall like different investing strategies. But if this was a real estate group, right, I'm now like, wait a minute, what is this group about?
I feel like real estate anymore.
Yeah, right. So it can be difficult to really grow and get traction if you don't have that focus.
Nice. So then you've met investors through that, and then other people who you could learn from that were just doing deals on their own.
Yeah, we've met a ton of people, and part of it is also, how do you create value for people? Because they want to get value too, right? Like, part of it is people love to have a stage where they can promote themselves and talk about things. The other part is just transactional, in the sense that, hey, they can get real business out of this. They can get potential clients and customers out of coming to your event, and we've had that as well. So it certainly helped us in our program. but these people have gotten solutions. You know, if you, again,
Yeah.
you think about it from not the salesmanship or, hey, this self-directed IRA person is going to be up there and they may be getting clients, but like, hey, there's someone in the audience who is looking to get a self-directed IRA and they've had questions and they can't get them answered. And what better way than to sit down at an event, talk to a guy directly, ask them all the specific questions that they've had, listen, figure out stuff that they didn't even know was possible, the questions they didn't even think to ask. And now they're gonna be more comfortable moving forward, right?
Yeah.
So it's about serving the audience. And if I can serve the audience, if they're looking to invest in apartment buildings and not be a landlord or a flipper, then great, I can serve them and they can get great value. But that may not be what everyone's looking for. And I think that's the thing you've got to be willing to build. You know, are you only willing to build something if it directly benefits you and that's it? Or are you gonna help people with whatever questions and challenges that they face? And obviously, yes, you want to benefit from it yourself, but are you doing it out of a place of service, or are you doing it out of just, you know, kind of a selfish gratification to say like, hey, if I don't get 10 investors out of this event, I'm not going to do it anymore. Right?
Yeah.
Like that's the mentality you have to understand of what does success look like for you.
Right. And then if people are actually benefiting, are actually gaining from this event, that's going to do well.
That's
Whereas,
right.
It's not about you. Well, how do we find out about this meetup that you have? Let's
Yeah.
plug
If
it.
it's the Chicago Multifamily Club. If you go on meetup.com, you can just, you know, search Chicago Multifamily Club and all of our events are listed there.
All right, nice. Great. Yeah, because I knew you were doing that, and I've never attended a meetup, just you know, not for any particular reason. I just you know, I figured that's how they work, but wanted to dive in. Anyone who's interested or like me has heard about it but never shown up, I should go to one. So.
Yeah, I mean, I'm not like the guy who goes to a bunch of different meetups. Sometimes I'll go out of curiosity or just, again, like the topic. But like I said, the thing that's cool for us, especially if you're an introverted person like me, is when you host it, one, you put yourself out there, you force yourself to go. But then two, you get to build connections with people. And you will get some regulars. You get people who you'll get to know really well. And that's where opportunities, you know, can thrive. And ultimately, every business thing is all about networking. So who do you know? What relationships do you have? And are you giving yourself the ability to connect with like-minded people? And I think that's really important. You got to give yourself a chance, because it's easy to look at this and say, well, you know what? I don't know any rich people. I don't know any accredited investors. So I don't think this is for me. And if you just stop there, then yeah, you're right. But if you say, well, how can I meet some? How can I meet people who are interested in this? How can I add value to them? And if you can ask yourself that, then the opportunities start to open up a little bit more. And part of what we like to do with our investors, and then also like investors that we coach, we help them understand, like, here is how it all works. You know, here's how you start to connect with people. Here's some of the nuances in there, but then also recognize that you're not the first person to face these challenges. So there's a process. You want to get clear on, again, who do you serve? How can you serve them? And if you approach it with that mindset, the opportunities become endless on how you can do that and how you tweak this or make adjustments here, or, you know, maybe we should add this for the people, right? Because now you can get fun and the people will tell you what they want if you really have an engaged audience. And again, this is even less about real estate, more just building community, and how do you engage your community and learn from them, and what are they looking for, and how do you be that person who helps them solve their needs? And by doing that, you obviously get a lot of value back on your business.
Yeah, and I could see how that would work in particularly well for if you want to find passive investors for your opportunities where you're running the meetup. People come, they want to learn how to invest in real estate, and they start to realize this is a lot of work. And then you have this opportunity to do it where it isn't a lot of work, and you give it to someone who knows how they're doing it. And it's interesting. I know, I'm sure at certain times where you feel like we're starting out where maybe you thought, okay, I'm still like a little inexperienced when you were first getting going, but compared to someone just showing up to the meetup or whatever, you have 3 deals you did and years of experience on them, and you are experienced.
Yeah.
So I was thinking that when you were talking about raising money, I was like, you've already done 3 deals. I mean, people need to understand what they're getting into, or this is an experienced person, but not, if you need someone who's done 100 deals, well, then that's not it. Just how you were saying, like, it's also about them when you get an answer.
And think about this too, because that person who's done 100 deals, they may not have the patience for this person, right? Because they're like, well, how much are you going to invest? Oh, you only got 25K? I'm not going to take my time and answer all your questions, go with all this back and forth, right? Like, our deals are 100K minimum, right? Or it's only for these kind of people. So there's a two-way street to, again, who you serve and what are they looking for. And to your point, you may be way more relatable to them where they can really learn from you if you've done 3 deals versus 100 deals, because you remember what it's like getting from 0 to 3. That person who's done 100 deals does not remember what it was like going from 3 to 10 or whatever, right? So they don't know. They stopped dealing with half of that stuff years ago.
Yeah,
so I think for that person, it helps to be with someone who maybe is closer to where they're at in their journey. Like I said, for me, my friend who I watched go from 3 to 9 units and then 9 to 90 was very pivotal, because she had the 3 and then she went to 9 right when I went from 0 to 2. And then I went from 2 to 5 and when she went to 90. So that's when I was like, okay, I feel like I'm kind of behind you on a couple of steps here, but you just took a huge leap. And that opened up the door, because I felt like, well, she did, maybe I could do it. And then I literally was like, all right, well, what does she do? What am I meant to do? Like, now you start to look at what multiple people are doing.
Right.
And then I just start pulling from their strategies to say, okay, let me try this, let me try that, let me try this. Let me see what works, what combination works for me. Okay, I really don't like that part, or this seems great. How do I do more of that?
Yeah.
Now you start to adjust and you get something that really works for you.
Yeah, and I really liked your part about building the confidence, because one thing, and I never really started thinking about this stuff till I started doing the podcast, because it keeps coming up. But I always was confident in my deals, and I never really thought, like, why is that, or why would someone not be confident? And it's because by the time I was actually buying a property, I'd looked at so many, just like what you said, where if you want to get your confidence up when you buy one deal, well, look at 100, and then if you're buying the best deal of the 100, how could you not be confident? Yeah. So that's such a great point. And then too, something that keeps coming up when we talk to successful people is something where someone like your friend who went to 90 units, and you looked at what she was doing and kind of her skill set, and kind of a common denominator is the successful people just really think to themselves, well, she doesn't have anything like magical going on that I don't have. Like, I could do it too. Yeah. Like, that's a big thing. And then, she and then the mentor helped get you to that point if you weren't already there. So that's really interesting to hear on your story.
That's a great observation, because you're right. And that's exactly kind of what went through my head. And that's why I say too, you have to build that inner confidence, and you have to look at the other successes you've had. So when you do look at someone else, it's not to try to bring them down, but it's just to elevate yourself up, to say, okay, this person did it. I have other things that I've been able to do that I think are harder than that, or, that I can do. Why don't I step it up? And I came from marketing where we used to do events all the time. And I'm like, this person runs a meetup. Like, then we start talking like, hey, how hard is it to put together a meetup? Really easy. You literally go on meetup.com. You create an account, you create a group or an event. You just tell, maybe you have to find a venue. It's probably the hardest thing. Find a venue. And then you just let people sign up. Yeah. You tell people and you show up, and be okay if it's only 4 people. Right. That's the hard part. The hard part is the beginning, where you still are questioning everything. You don't know if you should be doing this. You don't know if it's going to be good. You don't know if anybody's coming. You don't know if anybody's listening to your podcast, right? Yeah. That's the hard part. And then it's the confidence to just stick with it. Just stick with it and learn from it. I'm not saying do the same thing and no one shows up, keep doing it every week and not grow, but adjust. Okay, you know what? Hey, how did you hear about it? Oh, this? Okay, maybe I should did that sooner. More there, all right, why did let me tell people 2 weeks in advance instead of the day before. Yeah. Let me do this. Let me get on this website. Let me promote it this way. So all these little things you start doing, and then you start seeing success. I'll tell you, when I launched the meetup, it was very erratic. We were doing it way too frequently. People didn't know what to expect when they showed up for it. We literally had any kind of investor, any kind of real estate investor we would do. So we have a wholesaler, we get a syndicator, we get a flipper, we get, somebody in mortgages. Yeah. People didn't know. So, there was no reason to show up every month. There wasn't kind of a focus, and there wasn't even a promise of what you were getting by being a part of this group, what you got from attending these events. So we had to step back and really change it. And that's when we changed it to the Chicago Multifamily Club. We wanted to be really clear. This is for multifamily investors. And then the other big thing we did was we wanted to make sure we were clear on what the takeaway was going to be for every event. So we didn't just have other investors every day or every week. It was, hey, this month we're bringing in these brokers, right? So if you want to talk to, someone from Kale or someone from, some of the other big brokerage firms, we might bring them in. And that way you had a chance to do that. And when we brought them in, we would ask the questions that I think investors really want to know. And part of what I try to do was be the voice of the audience, and really think about where I was at, and sometimes where I'm at, but sometimes also like, okay, when I was in that space 3-4 years ago,
Right.
here are the questions I want to know. Like one question I would ask a broker is, hey, how do you build credibility as a new investor? I talk to new investors all the time who can't get brokers to call them back or tell them, hey, send me proof of funds and then I'll send you the financials, right? So that's a question. We would sit those guys down and we would say, hey, how do you handle this? What can they do so you don't give them this dog and pony show and make them jump through 52 hoops just to look at financials, right? So those are the kind of things we would do at our meetup. So people who were in that space, they got great value from coming to these events, right? If you got a chance to do that, let John be the bad guy and ask the question, right? Let's force this guy to give you a real legit answer.
Yeah.
And then why are they doing that? And they would tell you stuff that like I wouldn't even feel comfortable putting it out there in the content, you know what I mean?
Oh yeah.
Because you're like, yeah, well, we do that just because we think it's a tire kicker. So we just tell you to do that. And if you can do it, then okay, fine, we'll now try you. But most people can't, so we don't want to waste their time. So it's the tough love that people sometimes don't really want to hear, but at least they now have an answer and they're not, hitting a wall over and over without direction of what they need to change in their business. So
yeah, you should pay that question now. So how do you build credibility as a brand new real estate investor with a broker?
I've asked that question to multiple brokers. A lot of it comes back to what we've already talked about earlier, right? When we talked about building credibility. So one of the things you can do is highlight the experience you do have. If you have partners, a mentor, team members, you want to highlight that, but also be clear and understand how brokers work and how they get paid. Brokers get paid when they close a deal. They don't get paid by answering all your questions. They don't get paid by sending you to OM or by sending you the financials or by touring the property with you. Those things can all lead to a sell, but they make their money when they sell. And who pays them? The seller typically, right? On the commercial side, at least. So we're talking about the sellers. So be a credible buyer. Be clear on what you're looking for. What's your deal criteria? If you like a deal, tell them you like the deal. What are next steps? When's the call for offers? Can I tour the property? Can you give me the last 2-3 years of financials now, or do you want to do that after the LOI? The letter of intent. Be clear. Be professional. Present yourself as credible. If you don't know the stuff I'm talking about, you don't know about LOI, you got to educate yourself, right? You need to understand letter of intent. How does this work? Well, if you like the property, you're going to need to put in a letter of intent or basically an offer for what you want to buy the property for and the other terms in that agreement, right? So those are the things you have to do so that you can present yourself as a credible buyer. Make sure that you can help and actually close the deal. And if you are uncertain on some of those things today, figure that out now. If you don't know where you're going to get the money, okay, you need to go talk to some people so you can figure out, all right, if I were to get this deal, here's how it's structured. Here's my partner. Here's, what we're going to do, right? So those are the kind of things you'd want to do so you can stand out as someone who is credible and believable that, okay, if we work with this person, they're going to be able to buy this property. They know what they're doing. They're going to be able to close.
Yeah. And that's something where, like, if you talk to people all day as a broker, you can tell who knows what they're talking about, who's serious. You ask them, would you buy it for this number? And then you get some seesaw answer about, oh, I need this, and I don't need to figure out a lender next. Like, you can tell where, that you call and you're using all the correct terms for everything, and bought two just like it. That's the thing people run into.
Yeah, absolutely. So. I mean, think about it. If you are, and it doesn't have to be a huge property, but if you can tell them, hey, I've got 8 units, I'm looking to move into commercial. I saw you've got this property here. I'd love to learn a bit more about it, right? You don't have to go super deep and jumping into all this terminology, but you need to establish that you're a reasonably credible person out of the gate, like within the first sentence, really, right? Because they want, like you said, they want to know, am I going to be on the phone with this guy for 30 seconds or 3 minutes?
Yeah.
Is this my potential buyer, or is it just some other, dude looking to, waste my time? And it's unfortunate, but you got to understand it is a seller's market. So these brokers, they have all the juice right now.
Yeah.
And if they don't think you're a serious buyer, they'll just have you go play down there somewhere. And if you change, I mean, they won't be, usually they won't be disrespectful, but they'll give you some task and some hoops to jump through so they don't have to deal with you until it's time to deal with you.
Yeah.
Right. I'll go find me some proof of funds and, put together a bio, send me that, and then I'll give you this, whatever. Go play in the sand.
That's funny. Yeah. It all changes once you have a deal or two that you've closed. And that we just go through that when we enter a new market where we've bought, dozens and dozens of deals around the let's say the country. And then you go to a brand new market and you're still a little bit unproven, or the brokers don't know, will you buy? Are you actually going to buy anything here? And then we just went through that in Phoenix and we bought 4 deals, and now it went the flow of calls is the other way, where now everybody's calling us, or last year or so we're calling asking about questions. Now all of a sudden everybody's got deals for us after you buy 4.
That's exactly it, man.
So.
And that's the industry, and it goes back to being a relationship business, right? And brokers are happy to work with you if they believe you will help their business, right? I mean, if you're a buyer and you're buying properties, why wouldn't I call you?
Right.
If I can make one phone call and sell a property, why wouldn't I do that? As opposed to, I got to make 50 phone calls. I got to tour the property with 12 different groups. I got to get multiple call for offers and LOIs. I got to sit there. If I could call one group, get what the seller's looking for, and we're good, why wouldn't I do that? Of course I would do that, right? So you have to establish yourself as someone who's credible in the space and who people want to work with. You're easy to do business with. All those things come to play.
Yeah. Well, great. Well, yeah, let's close with talking about your podcast some. And I really like your story. So I'm glad you were able to come on, where to me, it's so relatable, because you didn't start out where your family wasn't doing real estate, or even for me, like I have a real estate degree, so then that's not as relatable. Yeah. It's funny with the actual real life experience. As I was getting the degree, I was doing my own deals, and I was kind of like learning in the real world even before we got to it in school. So it was like kind of funny where you can learn so much on your own, but like I really love hearing about all the marketing stuff, because especially some of these, you're doing these big pitches to CMOs and $100 million campaigns, and why can't you go talk to that person about investing in real estate? That seems pretty easy compared to this pitch you were doing. Yeah,
it's like you said, it's one of those things where you just have to put things in context sometimes, right? And you just need to be alone with your thoughts. You need to hype yourself up, however you need to do that, and you do have to reflect on your wins, and I think it's really important to do that as an individual. It's interesting because I used, had a, like my resume and then a bio, and someone was reading my bio, and I was just like, that's me. You forget like the things you've accomplished, right? Like, cause you don't walk around talking to yourself like that, right? It's weird. But it's like, you've accomplished things. So you need to understand people who don't know you, they don't know these things, and they need to make a split decision on whether or not this guy is worth listening to. And you do need to kind of let them know, like, yes, here's some successes I've had. I may know a thing or two about what I'm talking about. And if you want to hear more, great. So that gets into it. But the podcast is called Multifamily Insights. I launched this show about 4.5 years ago. And one of the main reasons I launched the show is because I sucked as a blogger. No joke. I thought I was going to do a blog first. I'm like, I like writing. I'll do a blog. I had no clue what I was doing. I had no direction with the blog. I didn't know what to write about. I would sit there uninspired. Yeah. And I was like, dude, this has got to be one of the worst blogs of all time. Like, I'm not growing. I'm not connecting with people. And I went back to what my mentor was doing. I'm like, all right, well, maybe I should just do a podcast. And to me, if a podcast felt like a lot of work, I'm like, oh, I got to get guests. I got to learn how to interview people. I got to ask questions. I got to edit the podcast. And then you realize, okay, just don't overwhelm yourself. There's steps and processes for everything you're thinking, right? There are ways to get guests where I don't have to sit there and call everybody I ever met. There are ways to edit the podcast where I literally don't have to edit it. There are people who can do that for you. There's, folks who can help me with creative. There's someone else who can do show notes. So like, you just start to understand like, okay, maybe this is more doable. And the big thing for me with the podcast that was great was there was kind of an immediate need I had, which was trying to figure out how to invest in other markets. So when I launched the show, it's called Target Market Insights. And I launched that show to figure out how to find the best places, the best markets and sub-markets to invest in. At the time I was in Chicago. I could not find a deal in Chicago where it was on the north side of Chicago where I can invest, bring on a partner, and there was enough profits for both of us. The only deals like that worked were like heavy renovation type deals. And I'm like, that's not my skill set. So I started looking other markets, particularly Cincinnati. But when I talked to people and they told me where to look in Cincinnati, none of them used data. None of them used, really anything that I could solidify. Other investors like the West Side, some like the East Side. And I'm like, but why? And I get there's more cash on this side than this side. But I'm like in Chicago, I knew intuitively where the path of progress was, right? I didn't even know that term. But that's what I knew because North Center, I figured out North Center because out of 77 distinct Chicago neighborhoods, North Center was the only one that didn't lose any value for their homes during the last recession. I saw that stat and I was like, that's a neon sign.
Yeah.
We're just going to invest here. I'm not looking at anything else. We're investing in North Center.
Yeah.
So that's what I did in 2012. I found a North Center because of that one stat. I said, if you could survive 2009, 2010 without losing any value, I'm not worried about anything that could happen to this market, like we'll figure it out. But market wise, I still need to find the right property, but market wise, geez, you survived that without a scratch.
You ever figure out why that is, or?
Was a quiet, just slept on neighborhood. It's positioned perfectly. A lot of people who were in Lincoln Park will leave Lincoln Park when they had family. The Bell School District's the number one rated, or at least at the time, number one rated school district in Chicago, and Bell School's right there. So what happened is people have kids. You don't want to leave. You don't want to move to the suburbs. You want to stay in the city, but you got to find a good school, right? Yeah. So they would move to Bell, and then Coonley is right over there, which is a highly rated school as well. So people love to be in the Bell School District. So that was it. And for us, it was like, oh, eventually we'll have kids too. So that makes sense. It's great. But it's tree-lined streets. It's like a suburb within the city. And just, it's easily accessible. It's just everything you could want. So we went there. Avondale was one where I really wanted Logan Square, but Logan Square, the numbers didn't work as a buyer. And then I looked at what other investors and renters were doing. Well, renters were doing the same thing, right? And here's another little cheat sheet, right? If you want a cheat tip, if you're trying to find a great place to invest, think like a renter. What area is getting too expensive for the renter, and where are they moving now as an alternative? Right. And what was happening is they wanted to be in Logan Square. It's getting too expensive, so they were moving to Avondale. So I moved and bought in Avondale because same thing was happening with us. It was like, oh, now the prices are way too high. I can't get the returns. Move to Avondale. We did the same thing at Hermosa. That time I had to go a little further out to say, all right, I got to wait for the market's going to take a year or two before it comes over here, but let's make this move. So I was trying to figure that out. And that's when I launched that podcast, Target Market Insights, and tried to learn from Cincinnati. The very first episode, my guy Triff Christoforou from 3CRE, he details why he likes this parts of the city. He slices it up. He tells me the Montgomery corridors where the growth is happening, blah, blah, blah. I bought a 28-unit building right along that corridor that they were getting ready to list for me. And based on the interview, I mean, because it was like, that was what I needed. Like, I'm talking to these people. No one's giving me data or quantitative information that supports it. They're just giving me, oh yeah, I like the West Side. And I'm like, I don't know this area that well. So I need something definitive. Like, it was when I lived in the city, it's, because I know 80% of it myself. I just need to justify it with some other people, right? But when you don't live in that city, I don't want to be guessing. I want to see the data, the facts that tell me this is a great place to invest. So I was able to get that. So we started the podcast there, and that allowed me to really tighten up our process of finding the right neighborhoods, the right cities to invest. I mean, you talked about investing in Arizona. You didn't just wake up and pick Arizona, right? You probably looked at some data, realized where people are moving to, where the jobs are going, and said, you know what? I think we should be looking to invest in Arizona. And a lot of people don't think about investing that way. A lot of people assume you need to invest in your backyard, but you can invest wherever it makes sense to invest and live where you want. And that's the beauty of, investing, particularly in larger deals, because if you're buying a house, well, there are a lot of things that can happen with one house, right? Someone moves out, you got to have somebody come move in and do all this other stuff. But if you got a 200-unit building, one, it's professionally organized, professionally managed. There's somebody on site. There's a team that's overseeing everything. Yes, you need to check in as an asset manager, but that thing is a business, right? It's got its own operations that are taking place, and you just really need to oversee that business. Very different from, a house 500 miles away,
Right.
where you really don't know what condition the property is in, and you might need to check in on a resident, or see what work needs to be done. So investing in those larger properties is really key, but in order to do that, you got to understand which markets you want to be in, and the data really allows you to figure that out. So, I mean, that's when we launched the podcast, just so I could really selfishly, so I could get good at that. And then it kind of flipped into, okay, hey, we can actually use this to grow our connections with other people as well. So we started focusing more on that.
Yeah, no, it's a great podcast. And then how, where can we find it?
Yeah, Multifamily Insights is anywhere you listen to podcasts. So Apple Podcasts, Spotify, I believe it's still on Stitcher and those other platforms too. But just check it out anywhere you listen to podcasts.
Great. And then now, how would people get in touch with you? I mean, if they want to invest in deals, mentorship, whatever.
Yeah, if you want to learn more about working with us, I would advise people to check out our sample deal. We have a sample deal package on our website. Whether you're an active investor and want to figure out how to put deals together, deal structure, stuff like that, you can check it out. Or if you're a passive investor and some of the terms that we threw out are new to you or a little confusing, it at least helps you wrap your head around how this works conceptually. So you can get that at casmoncapital.com/sample deal.
All right, great. Anything else you want to plug here, or what should we?
No, listen, I appreciate the time, Drew. I think the biggest thing is you just got to take action. And action could be as simple as an email or leaving Drew a review, but just something that allows you to move forward. And you have to give yourself credit for what you are doing. Because again, I think that it's easy to look at either you did a deal or you didn't do a deal, right? Or here's the deals you've done, or here's your AUM, your assets under management. But I also think there's that education process, and it's better to spend a lot of time getting yourself ready for the opportunity, and then taking action than just taking action or listening and doing all this stuff, but never taking action, right? So taking action is okay, but at some point, listening to this podcast and educating yourself, it's completely fine. You're putting in work. Don't feel like you're not doing anything. You're putting in work by doing this, but you do need to get to the next stage of that. And that may be looking at deals, talking to brokers, signing up with a group like ours. Whatever that next step is for you, you've got to figure out what that is and take it. Because if you're not going to take action and ultimately pull the trigger, then you're not going to change the dynamics of your financial future. So if this is for you, if you're learning about it, or you want to challenge that notion more, pick up the phone, ask some questions, get on a call, do what you need to do so you can get yourself ready to take that step forward.
Yeah, that's great advice. Well, yeah, appreciate it, John. Thanks for being on.
Absolutely, Drew. Thank you.
Great. Well, thanks for joining us, and we'll see you on the next episode.
Thanks for joining us on the Rise and Invest podcast. Please be sure to hit that subscribe button on YouTube or wherever you enjoy your podcasts. If you'd like to dive even deeper into real estate investing, check out our company's website, riseinvest.com, where we have numerous free resources and information that can help both active and passive real estate investors. Our 100-plus page passive investing guidebook, our trends report, and our blog are all available on our website. If you are an accredited investor, you can get started today as a passive investor in our multifamily investment opportunities by hitting the Invest Now button on our website.
The views and opinions expressed in this podcast are those of Drew Breneman and guests as of the date of recording, and do not purport to reflect the views or opinions of Rise Invest Holdings LLC and its subsidiaries. The views and opinions are provided for informational purposes only and should not be relied upon or deemed as investment or tax advice or an offer to buy or sell securities, and the speaker cannot be held responsible for any direct or incidental loss incurred by applying any of the information offered.